What's poppin'? Brand new whip, just hopped in. I got options. I can pass that bitch like Stockton. Just joshing. I'ma spend this holiday locked in. My body got rid of them toxins.
What's poppin', everybody? This is Pat Burke, and today we have a really exciting video for you guys today. We're going to be going over the basics of chart reading and technical analysis 101. You might be saying to yourself, Patrick, what the fuck is chart reading? Well, chart reading is taking the price action for a certain company, for a foreign exchange, for a commodity, and displaying it in a chart form so you can visually see the supply and demand. We can use these charts to find out when the supply and demand is either shifting, resting, or ready to explode again. And then we could use this to hop into the positions or hop out of the positions to profit and capitalize off of this. With that being my little intro spiel, let's just get the fuck into it. So starting off first, we have a trend. Alright, now we're going to be doing a uptrend. So basically what an uptrend is the stock is moving up and it's making higher highs and lower lows. And it's going to be continue to be in this uptrend until a low goes under the previous low. Once a low goes under the previous low, it's going to switch trends. Now on the other side, a downtrend is when a stock is moving down and it's making lower lows and lower highs. Now, similarly to an uptrend, when a stock breaks the lower highs and starts to move up, over that lower highs, it breaks the downtrend. Alright, so now we have a channel. And all a channel is it means the stock has no idea what the fuck it wants to do. It's not making new highs and it's not making new lows. Every time it hits its high, it's going to reversely come down. Every time it hits its low, it's going to bounce and come back up. There's no idea where it's trying to go. Okay, so it's very important to know where the trend is broken. Because once the trend is broken, the entire stock is going to switch the way it's going. So as I marked with this green line, as soon as the higher low gets broken, the uptrend is killed. It's dead. You can't use it anymore until a new trend arrives. Okay, now we have the same exact thing on the other side with the downtrend. As soon as the lower high is broken through, the trend switches. Now you're not in a downtrend anymore, and the stock has to search for what kind of trend it is, or if it's just going to channel. So now we got a channel, and this thing could really go either way. We don't know what we're really gonna have when we get a channel. This thing could either break up, as we're seeing right now, or it could break down under the lows. So we really gotta know what's going on when we see a channel, because you could break up over the highs or break down under the lows. So that was the basics of trends and channels and all that good shit. Alright, so that's everything you have to know about day trading. You don't need to know anything else.
Oh my god, stop fucking lying.
In a more serious note, let's go into patterns, because there's a lot of reoccurring patterns that we could use, and we could use these patterns to either find where stock, which has a lot of momentum behind it, is resting, or where it's getting to the point where there's a lot of buying pressure. Now the selling pressure is going to start coming in, and we can hop in when the selling pressure starts and make some quick profit off of that. So let's go on to patterns. Okay, so the first pattern we have is a bull flag, and this is a continuation pattern. Now, a bull flag is going to the upside, and basically, it is showing a strong stock that is making a big move forward, and then showing some rest. So as you can see with the black line, we have a pull and then a flag that sort of makes it look like a bull flag. So now, to entry on this is the break of the flag. So where the blue line goes through the black line, that is your first entry. Now your second entry for this is the top of the flag, the very, very top, as you can see by the red line. When the blue line or the stock goes through that, that is your second entry. Now we're going to look at our stop loss for this. Our stop loss for this is going to be at the bottom of the flag. The bottom of the flag, described by the red line, is your stop loss. Now, just like a bull flag, a bear flag is the exact same thing, just upside down. So a bear flag is going to be in a downtrend situation. And basically, when there's a strong downtrend, there's going to be a consolidation period, which is the flag, and then another strong move. So as we can see, we have the pull and the flag as depicted by the black lines. Now, once the blue line, which represents the stock, crosses the initial flag, which is represented by the red circle, we see the first entry point into the short position. The second entry point is when the stock moves through the flag, the top of the flag pull. And that is our second entry point, which is also described as entry number 2. Now our stop loss for this, similar to our bull flag, is going to be the bottom of the flag, described by red line.
Okay, so now just how we can use continuation patterns when we want to keep the same trend, we can also use reversal patterns when we see a trend change. So we have two trend reversal patterns that we can look at, and they are a double top or bottom and a head and shoulders. So the first thing we're looking at right now is a double top. So what a double top is that stock tried to move through the same point 2 times and got rejected both times. So as you can see right now, I'm drawing a resistance level right here, and that top is the resistance level where stock can't get by. Now I'm drawing the neckline right here, which is our entry point by the second red line. And once the stock breaks that second red line, depicted by the black circle, that is a cue to enter the stop. And once we do that, we have our exit or our stop loss right above our resistance level, which is the point where the stock do not cross. Alright, so now going on, we have a double bottom. And a double bottom is a very bullish signal. So a double bottom means that the stock tried to go under a certain point twice, and it failed both times. Now similar to a double top, we also have a neckline which we have to cross. Once we cross this neckline, we have an entry for a buy. And then we place our stop loss under the point which it failed to go under twice. Usually for a double bottom, you should note that the second leg down is usually a tiny bit lower than the first leg down.
Alright, so going on, now we have head and shoulders, and these are also a reversal pattern. Now the reason they're called head and shoulder is because it actually looks like a head and shoulders. You have a shoulder, a head, and then another shoulder. And then you have a neckline similar to a double top or a double bottom. Now, similar to this, once you cross a neckline, that is your point of entry. And also similar to a double top, your very top level of the pattern is your stop loss for this. Okay, so moving on, now we're going to do a bullish head and shoulders, which is also called an inverse head and shoulders. Now this is the same thing as the head and shoulders that we just saw, it's just flipped upside down. So you can see the exact same thing, just flipped the other way around. And just like we were going over before, once it crosses the neckline, that is our entry to buy. So if you're looking at the chart, as soon as the blue line crosses the black line all the way to the right, the very last time, that is your entry to buy. And your stop loss is at the very bottom of the head. The very bottom of your head is where you're getting stopped out of the trade.
Now, besides those patterns that we saw, those reversal patterns, there's also some candles that can help give us clues about reversal. So in this next thing, we're gonna go over some candles that can be really useful, especially when a stock is overextended to the upside or downside.
Okay, so the first types of candles that we're gonna go over is a hammer candle. Now, a hammer candle is gonna go the opposite way of the trend. So let's just say we have a bullish hammer candle. That means we're in a downtrend, right? A very downtrend, very overextended downtrend. And we're gonna see a very long wick on the candle, right? It's gonna be very red first, and then it's gonna rapidly move upwards, right? And leave a very long wick to it. Now, it's gonna do this with supporting volume. So this volume is probably gonna be one of the top volume bars all day.
Okay, so just like a bullish hammer candle happens in a downtrend, a bearish hammer candle happens in an uptrend. Usually after the stock has a very extended move and it's near high of the day, you will see a very big push upwards and then a very quick pullback back where you get this nice hammer candle with very high volume. Now this volume should be one of the highest volumes of the day, just like for a bullish hammer candle. And you will see a very big pullback. And once you see this pullback, you should not see another stock or another candle go above this candle. Well, if you see that, then the candle does not mean anything. Okay, so a hammer candle, you're either going to see it at the high of the day or the low of the day, depending if it's bullish or bearish. An engulfing candle, you could see anywhere in the trend. So engulfing candle opens at the low and closes at the high and is next to a red candle if it's bullish and completely engulfs that candle. Now this could be mid-range, this could be anywhere, this could happen anywhere in the range, and it usually shifts a trend change. Okay, and lastly, we have a bearish engulfing candle. Now, it's the same exact thing as a bullish engulfing candle, except it's going to be a red bar. So it's going to open at the high and close at the low and completely engulf the green candle next to it. Once again, it could be mid-range, it could be anywhere in the range, and usually shifts a shift in the trend.
Guys, that's the video. It's just the basics. I think it was a pretty good video.
Did a great job. And
I hope you guys enjoyed watching it. This is really for the guys who've been reaching out, like just want to get their foot in the door. Well, this is the basics. This is all the basic fundamentals you got to know to move on to the next steps. And I'm gonna be doing more and more advanced videos as I keep going on. Obviously, brand new page, brand new channel, I'm trying to grow it from the beginning. So I'm gonna start with the most basic and build the way up. Also, if you guys wanna wait, after the outro for the video, I put in some real life example of charts that show trends, channels, different patterns, different candles, so you guys can see for yourself right after the outro of the video. And while you're watching the outro, don't forget to subscribe to the kid, come on.